A simple guide to German income tax Part 1. For foreigners living in Germany or planning to move to Germany. If you are an international resident in Germany, or you are planning to move here, one of the first confusing topics you will face is German income tax. Many people ask questions like, do I automatically pay tax if I register an address in Germany? Is the 183-day rule the most important rule? Does it matter if I am single, married, divorced, or a single parent? What happens if I have children? What if I am an employee, self-employed, or both? Can I have a mini-job in addition to my main job? German tax law can feel complicated at first, especially for foreigners. But the good news is, once you understand the basic structure, it becomes much easier. This article gives you a simple overview in plain English. 1. Who pays income tax in Germany? The first question is whether Germany considers you a tax resident. In simple terms, Germany usually looks at whether you have a residence/home in Germany or your usual place of stay in Germany. Many foreigners know the phrase 183-day rule, but in practice German tax law is not based only on that idea. Staying in Germany for a long period can matter, but it is not the only test. Your actual living situation is important too. So, if you live in Germany on a regular basis, have a home here, and your daily life is centered here, Germany will often treat you as taxable here. For many foreigners, this is the most important starting point. German tax begins with tax residence, not only with nationality or visa status. 2. German income tax is not based only on salary. A common misunderstanding is that German income tax applies only to salary from a company job. That is not true. Germany looks at different types of income, for example, employment income, self-employment or freelance income, business income, rental income, investment income, other taxable income. That means your tax situation may be more complicated if you are not only an employee, but also earn money from side work, online business, freelance services, or rental property. In Germany, these income sources can be combined and reviewed together. 3. How is German income tax calculated in general? In a simplified way, German income tax works like this. You determine each type of income. You subtract the related costs. You combine the remaining amounts. You apply possible deductions and allowances. You calculate the taxable income. The tax rate is then applied to that taxable income. Germany uses a progressive tax system. This means lower income is taxed lightly or not at all. Higher income is taxed more heavily. So your tax does not work like one flat percentage for everyone. The more taxable income you have, the higher the rate may become. 4. Why family status matters. Your family situation can have a major impact on your tax situation in Germany. For example, it matters whether you are single, married, divorced, separated, a single parent, living with children. This does not necessarily mean that the tax rate itself changes completely, but your family status can affect wage tax withholding during the year, tax class for employees, available deductions, child-related tax benefits, whether joint tax assessment is possible. That is why two people with the same salary may still end up with different tax results. 5. Married couples and joint taxation. If a married couple meets the legal conditions, they may choose joint assessment in Germany. This is an important topic because many foreigners hear that married couples pay less tax in Germany. That is not always true in every case, but it can often be beneficial, especially if one spouse earns much more than the other. Why? Because in joint assessment, the spouse's incomes are considered together under a special method. This often helps couples with unequal incomes. If both spouses earn almost the same amount, the tax advantage may be smaller. So the key idea is, joint taxation is often more favorable when one spouse earns significantly more than the other. 6. Children, why they matter for tax. Children are a very important part of German tax law. If you have children, there may be tax-related benefits such as Kindergeld, child benefit paid out regularly, Kinderfreibetrag, child tax allowance in the tax assessment. These are two different concepts. Kindergeld, This is usually a monthly cash payment. Kinderfreibetrag. This is not a monthly payment. It is a tax allowance used when the tax office calculates your final annual income tax. A very important point for foreigners. You do not usually get both as two full separate advantages on top of each other. The tax office checks which option is more favorable for you and applies the better result. So the easiest way to remember it is, Kindergeld equals money paid to you regularly. Kinderfreibetrag equals tax relief in your tax assessment. 7. What if a married couple has 2 children? For many families, this question is very important. If a married couple is jointly assessed and has 2 biological children, the child-related tax allowances are generally considered for each child separately. So in simple practical terms, 1 child equals 1 child-related allowance set. 2 children equals 2 child-related allowance sets. This does not mean that the family simply receives cash for those allowances. It means that each child is taken into account in the annual tax calculation. 8. What if a single parent has 2 children? Single parents should be especially careful because there is often confusion between "I have 2 children" and "I automatically receive 2 full child allowances." Those are not always the same thing. In practice, a single parent will of course enter both children in the tax return. But whether the parent receives only their own portion or a transferred portion from the other parent depends on the legal situation. So the simple rule is, yes, both children must be declared. No, that does not automatically mean full tax allowance rights in every case. Single parents may also qualify for an additional relief amount specifically for single-parent households, which can be very important. A simple guide to German income tax Part 2. 9. Students, trainees, and university students. Many foreigners assume that students do not pay tax in Germany. That is not automatically true. Students, trainees, and university students are not under a completely separate tax system just because of their status. If they earn taxable income, the general tax rules may still apply. However, in practice, many students have relatively low income, so the final tax burden may be small or even zero. So the better question is not, am I a student? The better question is, how much taxable income do I actually have? 10. If you are 100% employed. If you work only as an employee, your employer usually withholds wage tax directly from your salary during the year. This is why many foreigners think their tax issue is already finished. But that is not always the full story. Your payroll withholding is only the running tax deduction during the year. Your final result may still change if you file a tax return, you have deductible expenses, you are married, you have children, or you have additional income. So for employees, monthly withholding and final annual taxation are related, but they are not always identical. 11. If you are 100% self-employed or freelance. If you are self-employed, Germany usually does not withhold tax automatically like an employer would. Instead, you normally calculate your profit, income minus business expenses. That profit becomes part of your tax calculation. This is why self-employed people in Germany must be much more careful with bookkeeping, invoices, and expense records. In many cases, the tax office may also require advance payments during the year. So if you are self-employed, an important practical rule is, not all money entering your bank account is really free money. Part of it may need to be kept aside for taxes. 12. If you are both employed and self-employed. This situation is very common among foreigners in Germany. For example, a person may work full-time for a company and do translation, consulting, tutoring, design, online sales, or freelance work on the side. In that case, the salary and the side income are not permanently separated in the final tax result. They are usually brought together in the annual tax calculation. This often surprises people. Why? Because the employer may have already withheld wage tax correctly for the salary, but the extra freelance or business income may create an additional tax payment at the end of the year. This is one of the most common reasons foreigners in Germany are surprised by tax bills. 13. Can you have a mini-job? Yes, in many cases you can. A mini-job is a small-scale employment arrangement under special rules. It can be attractive because it is often simpler than a normal employment relationship. But foreigners should not assume that a mini-job is always completely tax-free or that it has no effect at all. The treatment can depend on questions like, do you already have a main job? Is this your only mini-job? Do you have multiple jobs at the same time? So the answer is often, a mini-job may be possible, but the full tax and social insurance treatment depends on your overall employment situation. 14. Why foreigners need to be extra careful. Foreigners often have tax issues that German-born taxpayers may not have. For example, income from another country, savings or investments abroad, family living in another country, children studying abroad, salary from Germany plus income from home country, uncertainty about tax residence. That is why foreigners should never look only at one part of the picture. German tax law is not only about how much salary do I earn? It is also about where do I live for tax purposes? What kinds of income do I have? Am I married? Do I have children? Am I a single parent? Do I have foreign income? Do I have a side business? 15. The easiest way to understand German income tax. If you are new to Germany, the best way to think about income tax is this. Step 1. Check whether Germany sees you as tax resident. Step 2. Identify all your income types. Step 3. Subtract eligible costs and expenses. Step 4. Review your family situation. Step 5. Check child-related benefits and allowances. Step 6. Calculate your final taxable income. Step 7. Apply the tax rules to the full picture. Once you understand this structure, German income tax becomes much less frightening. Final thought. German tax law can seem very complex, especially for foreigners. But you do not need to understand every legal detail at once. What matters first is understanding the framework. Tax residence, type of income, family status, children, employee versus self-employed status, possible side jobs or mini-jobs. If you understand these building blocks, you will already avoid many of the most common mistakes.